We have our next guest, our Alpha Manager for the day, Siddharth Bothra of Motilal Oswal EMC is with us. Siddharth, hi. Good afternoon. Thanks a lot for joining us.
Good afternoon.
So, your portfolio has been relatively safe because you've had stocks like Britannia, the HDFC Twins, Kotak, Maruti. That also made a comeback after that big decline. But thoughts on the overall market and the mid-cap space? Yesterday we had the Nifty Junior, for example, down 600 points. You reckon we are perhaps at the last leg of that downtake on the broader market, and it's good time to start building some portfolios, or you reckon there's some more to go considering the kind of big move that we had in 2017?
I would go with the second option. I think we had seen huge excesses happening on the mid-cap and small-cap space. Right from, if you look from 2013 all the way to 2017. In fact, in 2017 itself, the mid-cap index was up some 48% versus 28% for Nifty, which was like a 20% difference. And if you look since Jan till today, mid-cap index down some 15%, 14.5%, and your Nifty is up 4%. So roughly around the entire difference being made up. But I feel that the excesses on the mid-cap were quite a lot, and even today if you look at the valuations on a risk-reward, I think large caps look much more attractive. So I believe you will see some more mean reversion happening, wherein the large caps will do better. But having said that, I think the reasons which led to the major diversion between large caps and mid-cap, which were there in the last 2-3 years, is no longer there after, especially after the major, the SEBI move on MF reclassification. So I think going forward, the performance difference between these two will not be starkly as different as it was in the recent past.
Okay, speaking about some trends, I know we can't discuss stocks, Siddharth, but you do own Ashok Leyland in one of your funds. I'm not going to talk about that stock or that company, but generally there's a lot of upheaval. I mean, a lot of talk with these overloading norms. We've seen price correction on a couple of the CV names, even CV financiers for that matter. What is your opinion of this entire episode that's played out?
So I think there's still no major certainty whether this entire move is on a prospective basis, or does it also apply on a retrospective or on the stock itself. So my sense is it is on retrospective stock as well, because if you think about it on a prospective basis, it would be, I think, negative for almost everyone, whether it's a transporter, whether it's a CV financer, or even for the manufacturer in the short term. So given that, if you go with the assumption that it's on the entire stock and prospective both basis, then I would think it is more positive for transport players, the freight people, also positive for maybe the CV financiers, but not so positive for manufacturers in the near term, because it will definitely impact demand in the next 3 to 6 months for CV manufacturers.
One stock where you've seen some losses of late is Interglobe Aviation, despite the fact that crude has come off from the highs. Your thoughts on the aviation space now?
I think the entire for when you look at aviation space, crude is such a large segment on the cost side, and when crude moves up from say 30 to 80 in such a short time, such a sharp move, you will see pressure. So I think in a way it would get impacted by what's happening on the crude side in the near term at least. On a longer term basis, once the crude settles, I think even at a higher crude price, maybe some companies will have an advantage because they have a cost advantage, and particularly in an environment where crude is high, the competitive intensity, in a way your competition suffers much more. So they would actually have an advantage, but near term, obviously everyone gets impacted, and even a low cost player will get impacted. So it would be negative for the sector.
Okay, fair enough. On crude, you also do own some refining companies. I think HPCL is one of the holdings in the funds. You looking to change the stance at all as we are getting closer to elections, or are you reasonably confident that these companies will hold their own, because the stocks have really been punished in the last couple of months. They've destroyed a lot of wealth as well.
So I think what's happening here is clearly, crude, as if it kind of, even, many of the OMC players themselves have mentioned that till crude is below 100, the decontrol stands. So I think in an environment where, there's a decontrol for pricing, these companies have got beaten down, but there's a lot of, value in that. And clearly, the election, the time period between the election and now, there could be some uncertainty on the price moves and all, and it may not be on a regular basis. But we see deep value in most of these OMCs. And in an environment where crude were to fall, they would, I think, again come back strongly. And if you look at their numbers, have continued to be very strong. So we continue to be positive on AMCs.
Okay, you have a lot of exposure to insurance. You have HDFC Standard Life, there's ICICI Lombard, Max Financial as well, would fall into that category. What is so exciting about this space? We had numbers from ICICI Lombard today.
Yeah, so I think Lombard numbers are very strong. I mean, without getting into stock specific thing, I think we are very positive on the insurance sector. We think it's very similar to where, say, private banks were 10, 15 years back. There's, both on the life side as well as in general insurance side, these are good businesses. And within that, you're getting some of the companies with very strong management credibility, proven track record. So we find both the insurance side, both life as well as the general insurance very attractive, and we have disproportionate weightage in the insurance sector in our fund.
Siddharth, now let me draw you into the debate we were just having before you joined in, this quintessential eternal debate between how and when and if at all to try and pick the bottom in PSU banks, because Federal's numbers were very good. Obviously, that's a corporate-facing bank. But the question is now with this government talking of again a round of capitalization for PNB, etc., the whole IDBI deal. I mean, I don't know if there's any sense in looking at PSU banks afresh. You are right now sticking to the biggest and the best private sector names in your funds. Any view or any rethink on PSUs?
This has been, I've seen this debate right from the last 2-3 years. It's been going on for a very long time. There's always this assumption that now all the write-offs are behind us, all the provisionings are behind us, and now things will suddenly change. But I don't think the entire pain's through. Even otherwise, if you look, there are some sectors which have not been completely provisioned for, and even if you were to kind of account for, I think the ROEs for many of these companies remain very low, much below their cost of capital. Growth remains an issue where these companies, some of these banks are not able to grow, and the private banks are growing at a much rapid pace. So we would rather stick with quality where there's a consistent growth, there's a high quality of management, across cycles they've proven themselves. So we still don't see any merit in changing our stance in case of on the bank side.
All right, Siddharth, always good talking to you. Thanks a lot for your time today.